Eternal earnings flashing on your screen right there, fresh. The revenue has seen a crazy uptick. I think from a 4,800 crores to a 13,500 crores is where the revenue number has come in. There you go, 8,650. The estimate was that it will grow at around 8,665 odd crores, but it's nearly double of that estimate. Let's try to pull up the EBITDA numbers as well and the net profit as numbers as well and margins. EBITDA has come in at 239 crores versus that of 235 crores of estimate. So largely EBITDA in line with what the street was expecting. The net profit has come in at 65 crores. So that's something that the street will probably not appreciate because it's down. The expectations were to come in at 107 crores, and this is largely probably because of their expansion of dark stores. EBITDA up 5.8%. The stock though is recovering and how? Up 0.5%. It did slip in red, now in the green, and this is probably on the back of the top line growth that Eternal has seen, which is way beyond what the street was expecting. It's interesting to watch the recovery in the counter. I'll try to take this quickly with Nirav. Nirav, it's just come out, I understand, but any quick view on Eternal that you are seeing? I mean, we've seen a sharp recovery in the counter, and the top line has definitely beaten the street estimates.
Well, I think as far as the consumption story is concerned, markets would like to look at the top line growth and would like to be a little liberal as far as the optical profitability PAT levels are concerned. So I think the market would be enthused by the jump in the top line. The revenue growth has been quite encouraging. So I think markets would definitely give it a thumbs up. That's my take at this point of time.
With regards to the segments also, if you take a look, the food delivery, we've talked about this, has remained, stagnant in the past few quarters as well. This time also, it's grown at around 2,400 odd crores versus 2,000 crores earlier. So slight uptick in terms of the food delivery segment. But overall, if you take a look at the Hyperpure numbers, that has come down a tad bit on a consolidated level basis. It was around 1,400 crores in Q2 FY25, which has come at around 1,023 odd crores in FY26. But quick commerce has seen a sharp jump, and that is where the boost in top line is coming in from 1,156 crores to a 9,891 crores in the quick commerce space. The going out business, however, has slightly inched up from a 154 crores to a 189 crores, and this includes your district business as well. But overall, I think the beat is largely driven by Blinkit, and that's been the case so far for Eternal earnings for the past few quarters as well. Kush, your quick view, the recovery in the counter is, quite visible and significant. 1.5% is the gains that has come in now in the quarter, and this is in the last few seconds or just a minute is what we are seeing. Your view quickly on the charts?
Yeah, and if you didn't tell me the results were out, I would have said it's more of a continuation of the trend that's been going on for Eternal.
Yeah.
Very solid medium-term structure. I think this could well push the stock to 375, 390 odd levels, perhaps even closer to 400. That's the kind of momentum it is in if you have continued to hold. Fresh position I wouldn't advise because it's coming closer to overheated territories. So buy on dips, but if you have a position, you could well continue to hold Eternal for targets of 390 and 400 levels.
All right, so that's the view coming in on the entire Eternal. Of course, we'll try to, get an overall view as well with regards to where, the Eternal numbers go. Now, seeing gains for 2.4%, the stock is definitely zooming in trade. And largely, of course, this is on the back of the kind of top line beat that has come in. But of course, the interesting thing to watch out would be as to how the dark store edition has come in. But yeah, I think we'll take that up with the analyst himself, Sandeep Abange, who's the lead research analyst, consumer at Midcaps LKP Securities, joining us now. Sandeep, hi, a very good afternoon to you, and thank you so much for joining us. Your first take on Eternal numbers.
Yes. Thank you so much for having me. Prima facie, the numbers look great. And we have seen good amount of beat in the top line. and we will have to watch out on further commentary. But overall, prima facie on the revenue growth part and also on the EBITDA as well as on the PAT front, the company the numbers look good, and we will be watching out on commentary on usually on the dark stores and also on the GOV and NOV growth, how it has been in this quarter. So yeah, prima facie numbers look great.
Deep, I think the two reasons as to why we've seen that downtick in terms of profit and versus the expectation, of course, first one being depreciation, and this could be on account of higher addition of dark stores. Of course, that commentary will be awaited and we'll know once the shareholders letter is out. The second one being employee benefit expenses have inched up quite a bit. Your quick view with regards to how you are viewing these costs, because they have been inching up quite a bit. Depreciation I can understand, but employee benefit costs going up. Any rationale with regards to this counter?
On the employee benefit part, it's mainly the expansion of dark stores. And also on the hiring of overall new people in their team. So on the employee expenses, majorly we were expecting somewhere around a 20-30% jump, but the overall jump has been quite high. So we will get more clarity from the management in the phone call on this part. But yeah, the overall PAT, the stress on the PAT was majorly on the high depreciating cost, which was mainly, like you alluded, due to the dark stores and expansion in the dark stores. And also their ad expenses have also gone up significantly. So that also has been one of the reasons.
Sandeep, even the going out business is something where losses have been incurred this quarter. I mean, it was sitting on profits of around 18 crore Q2 FY25, but this year there's a loss of 57 crores. So I believe this is where now they've started to burn cash. Is that understanding correct?
Yeah, see, going out business is still, once we have seen the Paytm acquisition, so these numbers have been added. And that has majorly played a role in terms of the overall decline in the PAT. So overall, the going out business is still in that experiment stage, and they are still experimenting newer cities and adding new cities on a quarter-on-quarter basis. So we believe that this is a very long-term business. And overall, the main focus should be on the quick commerce as well as on the food delivery. Going out, they have been experimenting a lot lately. So hopefully, things should pan out well on the long-term side on the going out business.
Okay. All right, Sandeep, thank you so much for bringing us those details. Of course, we have to wait and watch out for the commentary coming in the shareholders letter as well as in the con call. Thank you so much for taking out the time. We're also joined by Sunny Agrawal, the head of fundamental equity research at SBI Cap Securities, joining us now. Sunny, hi, a very good afternoon to you, and thank you so much for joining in. Your first take on Eternal numbers.
Good afternoon. And I think again on top line, it seems a bit as far as Eternal is concerned, especially on quick commerce side. So I think the numbers are slightly ahead of estimate. And in terms of on the operating expense side, so we have seen a Q-on-Q uptick in employee expense. Again, that may be because of the expansion which the company has taken or has alluded to on the quick commerce side. And the same is the case with an advertisement and promotion expense. So I think the company seems to have spending a lot more money to promote its quick commerce as well as food delivery business. So there also we have seen a significant uptick as far as expenses on ad and sales promotion is concerned. So below the EBITDA, we have seen again an increase in depreciation and finance cost. That may be partly due to the dark store expansion as well as because of increase in rental expense, which is now because of Ind AS 116. That also forms the part of finance cost and depreciation expense. So I think overall, I think increase in expenses likely because of the store expansion which the company has undertaken and have alluded to also during the earlier analyst call. In terms of profitability or store level or per customer level data, we need to wait for shareholders later.
Yes, Sunny. One more question is there. Of course, the stock, you just look at it, the stock is going nosediving again from its day's high levels. We saw a sharp recovery coming in after the numbers were out, but Mahima is actually giving us the details in some time for the shareholders letter which will be coming out. But Sunny, let's look at the details. Of course, the prima facie, the revenue pad, these numbers have actually beaten the estimates. But if you look at it, are there any internals which might be a concern for the street? Because we are seeing the stock is actually falling. It's down almost 1% now at the 350 levels. Sunny, what are the important concerns which could be there if you look at the internals, or what could be going wrong for the company or a concern?
Again, I think one of the important parameter which the street will be looking forward to will be the path to profitability or ramp up in margins on especially on a quick commerce side. So we have seen the company going very aggressive on capex front as far as quick commerce business is concerned. So I think it seems to be playing out well, at least from getting more GMV, which is more sales because of the store expansion. But at the same time, the company need to ensure that operating leverage is something which should start kicking in post this expansion, which can lead to an better margins on quick commerce side, because ultimately the quick commerce has become pretty large in overall revenue share, and that is a business where it will look forward to in terms of contributing to the profitability. So I think the path to profitability on a quick commerce side is something which it will be looking forward to.
Okay. All right. So that's with regards to where Eternal is concerned. Sunny, thank you so much for taking out the time and speaking with us at NDTV Profit.